Welcome to the Great Crypto Lockup Seminar. We're about to get started, so get comfortable, get a notepad and pen if required, turn off all distractions. I'm James Woodburn, your host, and in tonight's show, you're going to discover why certain key crypto projects are getting bought up and locked up by big money crypto investors. This is your chance to follow the smart money into these projects ahead of the next epic upcycle in crypto. So strap in, because a little later, we're also going to reveal the full details of one of these projects, CryptoX, that has billions of investor dollars mobilizing even as the crypto market falls. CryptoX is set to drop a huge bombshell at the end of September. If our man is right, it could send this crypto out of the orbit of this current bear market. If you take one piece of urgent advice from tonight's seminar, it's to look to buy CryptoX now. But CryptoX is really just the beginning. Why should you be interested in crypto at all at present? Because as you're about to see, this could be one of the few opportunities you see in your lifetime to make a material difference to your future wealth. And it could start as early as the 28th of September with one single market rocking event. Are you ready? Then let's go. You've just seen what a good old-fashioned bank run looks like in the digital asset world. $2 trillion vaporized from the crypto system in 6 months. For many of the 19,000 altcoins, an utter bloodbath. Some say this is the end for crypto. So, what we're recommending in tonight's seminar goes against the grain. You see, our guest today sees opportunity amid the fear and chaos to buy up projects unfairly caught up in the bloodbath. For example, what you're looking at here is the symbol for CryptoX. If our expert is right, this one token is about to emerge from the crypto wasteland and become an integral part, not just of an ever-expanding crypto ecosystem, but of the entire decentralized web of the future. Just like how Amazon rose from the dot-com ashes in 2000, this is the time to strike. To be clear, CryptoX is not its real name. It's not Bitcoin or Ethereum. In fact, you may not have even heard of it. And as you'll see, it's a hyper-contrarian move. CryptoX has lost around 80% of its value since its peak in May 2021. It may feel like you're rushing into a burning house, but we're not being flippant with this recommendation, and we're not completely alone. Despite the crypto deep freeze, a key figure in the crypto world just came out and said that while I'm avoiding most altcoins right now, CryptoX is setting up for a 100x rally, and you'd better be ready. Tonight, you will get full details of this token and why our guest is so excited about it. But as you will see, CryptoX is just one of a few key projects he is buying up right now. They are all part of a much bigger story in play. Because despite what you're hearing, crypto isn't dead. Far from it. Today, we'll show you exactly why that is. We'll also show you how, behind the scenes, a host of big money players are setting themselves up for crypto's true awakening. It could be the final mega bull cycle we see before some form of mass adoption takes place. Now, this whale behavior is a big reason why we're convinced now is the ideal time to stake a claim in certain core projects that are going to emerge from this bear market as the Amazons and Googles of the crypto world. Now, that is a massive claim, I know, especially in today's market, but stick with us. Because while many altcoins will rightly die off, never to resurface again, projects like CryptoX could be about to weaponize all this upheaval and emerge as the essential rails behind a new world of finance. After we've revealed the name, we'll show you why we think a potential 10 times price growth run could be ignited by a single market-rocking event due to occur in New York at the end of September. It's part of a wider movement unfolding right now amid the chaos. You see, while the general market remains bathed in blood, at the very nada of this giant risk-off in crypto, a strange phenomenon started to gain traction. Starting about the middle of June, over a 2-week period, you started to see curious pops of certain altcoin prices. With the bear market still in full bloom, some alts have started snapping back hard. That's because while weak-hand investors have run for the hills, a different class of investor has been quietly and massively accumulating and locking up discounted supply of a very specific type of crypto asset. That's why we're calling this phenomenon the Great Crypto Lockup. And Crypto X, as soon as late September, along with a few key other cryptocurrencies, could be about to take center stage. My name is James Woodburn. With me to walk you through all this is Ryan Dinse. Ryan, welcome. Now let me start with a blunt question. Why would anyone in their right mind consider buying any crypto right now, let alone a little known altcoin?
Hi, Woody. Yeah, it's a blunt question, but it's also a fair question. And it was a question people asked about certain .com stocks back in 2000, 2001. I always remember Jeff Bezos remarking about the price of Amazon after the .com crash. The share had fallen from more than $100 down to around about $6. But Bezos saw the big picture. He knew that anyone who jumped in at $6 was locking in a future fortune. He could see the figures coming in, and he understood the business model of Amazon better than anyone. He knew it was simply a matter of time and scale. And Bezos was right. The rest is history. Today, Amazon trades around 400 times higher than that .com low. And yet, here was how the media was reporting on it at the time. Now, that probably looks familiar. I believe it's the exact same situation right now with certain key projects in crypto. Right now, the whole crypto sphere is being cleaned out of the weaker projects. Ill-judged experiments are failing, and anyone using leverage is being wiped out. It's brutal, unmanipulated capitalism in action. Here's the thing. Projects that can survive such volatile times come out the other side more battle-hardened than ever. The same thing happened when the .com bubble popped. Hordes of dodgy startups fizzled out of existence, leaving the Amazons and Googles to dominate the next 20 years. So, if you believe the same thing is about to happen again with digital assets, then these are the ideal moments to quietly build a stake in a few well-chosen projects. You see, in the crypto world, price action is only a tiny part of the puzzle. You've got to also look at what's going on elsewhere too. For example, if you investigate the weird stuff that's been going on with CryptoX in recent weeks, you'll see pretty clearly something's up. Between the 3rd and 10th of June, when the price of pretty much every crypto on the planet was cratering, the number of CryptoX addresses surged tremendously, according to aggregator platform Messari. It was its highest single-day movement in 5 years. So what's the deal here? As I'm going to show you, I believe CryptoX is about to become the poster child of a new bear market phenomenon in the digital asset world. And if we've got this right, the available supply of this token is about to get locked up. What happens when the supply of anything gets scarce? That's right, the value goes up. I believe that is what's going to happen to CryptoX starting on a very specific date, the 28th of September 2022. If I'm reading this correctly, this explains some very weird things you're seeing with CryptoX's on-chain data since the start of June. Now, on-chain data are telltale signs you can see on the blockchain that give you an insight into what's happening behind the scenes with a crypto. And if CryptoX drops the bomb, I think it's going to drop in late September, it could mark the start of a monumental price run through 2023 and beyond.
But CryptoX is not a one-off. It's just one part of a wider trend that started to bubble beneath the surface of this bear market. As I've said, it's called the Great Crypto Lockup. This is a FUD market right now, meaning it's a market ruled by fear, uncertainty, and doubt. But what we're about to show you is how we see the smart money using this FUD market to their long-term advantage, and how you can do it too, starting today. These down markets are good for crypto because they're humbling, is how Kristen Smith of the Blockchain Association put it recently. This is ultimately going to make everyone better and stronger. If you disagree with this, then nothing that Ryan is about to show you will be useful to you. You may as well stop watching now. You certainly shouldn't buy CryptoX. But if you think there's truth to this statement, then you should seriously consider front-running what we're calling the Great Crypto Lockup. The idea behind it is this. As we move through the crypto winter to a new spring, a new base of strong holders are going to start locking up the supply of certain key cryptos, providing a strong springboard to attack new all-time highs. These opportunities will be rare. Many bad altcoin projects will simply fade away, as happened in the bear markets of 2015, 16, and 2018, 2019. The exceptions to this are what Ryan calls lockup cryptos. These are key crypto projects that will survive the winter and emerge to dominate the space for years to come. Now, CryptoX, Ryan believes, is going to be the first on the lockup list starting around the 28th, 29th of September. Ryan will name this cryptocurrency token tonight, but he will also be showcasing a new portfolio building strategy that harnesses this great lockup phenomenon. It has three components. Core holdings you should be targeting now. These are cryptocurrencies trading at heavily discounted prices, which will form the essential fabric of the crypto world for the rest of the 2020s. Lockup speculations, the 8 specific altcoins Ryan predicts will be swept up by this phenomenon. Ultra high risk, but the rewards are potentially exponential at current prices. And lockup income. Some crypto projects provide ongoing income streams. They do this through a process called staking. Staking has the advantage of actually growing the size of your wallet during a bear market. Some big lockup moves are afoot here too. As Daily Coin points out, the major players in the cryptocurrency market are finding ways to leverage the bearish market run for greater yields after this period of darkness is over. So we're looking at core holdings, ultra speculations, and income, and building a complete, expertly guided crypto portfolio around these components from the ground up. Now, I don't know of any other licensed investing business in Australia offering this approach to cryptos, especially at this point in the market. Ryan, explain more on your approach.
Yeah, so the most frustrating thing for me in crypto is that when prices are surging, everyone wants to get in. My friends text me for hot tips. Long-lost colleagues phone me up to pick my brain on blockchain tech. But then you get a catastrophic collapse like what we got recently, and everything goes silent. And yet, the data will show you clearly, time and time again, that these are the best moments to get into crypto. And that's not just a crypto thing, that goes for all types of markets. In my 20 years of trading and investing, I've realized the weirdest paradox of investing is probably this. That's that hated investment ideas are often the best kind, because every doubter is a future buyer at much higher prices. And as you can see here, there's a whole lot of doubters in crypto right now. We're still very much in extreme fear mode. But long-time crypto watchers will know we've been in this mode many times before. Back in June 2011, Bitcoin lost 99% of its value after the Mt. Gox disaster. In August 2012, we had a 56% crash. The 2018 crypto winter saw an 84% drawdown. And in March 2020, we had a 30% flash crash. So what's happened this year is nothing new in crypto terms. But try telling that to the mainstream media. Sell all crypto and abandon all blockchain. Most cryptos will crash to zero. Talk of Bitcoin's demise was on the money. Bitcoin con may soon be over. Bitcoin pyramid scheme continues to collapse. And this one from TechCrunch. It's the end of crypto as we know, and I feel fine. As you can see, the mainstream media loves a crypto crash. But there's a funny thing about the headlines and statements I just read. You see, they read like they're from today's newsfeed, but they're actually years old. In fact, all those headlines were from the last crypto winter, which kicked off in January 2018. As you can see here, all those headlines were wrong. That last winter was caused by the high failure ratio of loads of initial coin offerings. These were essentially experimental startups. What happened was the values of these projects got ahead of reality, and we had a deep decline over about 2 years. If you read the papers, 2018 was the end of the crypto world as we know it. But here's what I was advising at the exact same time you were reading those doom and gloom headlines. I see Bitcoin like a coiled spring right now, and the longer the price stays down, the harder it will bounce up. So let's look at the facts. What if you listen to me and not the doom and gloom headlines in the depth of the last crypto down cycle? Now, this is a chart of specific cryptos I was urgently recommending you buy during the last crypto winter. There's Bitcoin and Ethereum there on the left. If you'd sold your Bitcoin in December 2018, the week Professor Robert R. Johnson told you no investment strategies are worse than cryptocurrencies, you'd have done yourself out of a gain of 1,923% in just 3 years. If you'd listened to Mother Jones in December 2018 telling you that cryptocurrencies are inherently a dumb idea, you'd have then missed Ethereum's rise of 5,495%. Now, these are pretty stark examples of what happens if you let the crypto is dead headlines drive your decisions in a bear market. But then there's the smaller cryptocurrencies. Band Protocol, nearly 10,000% over that period. Engine Coin, 22,900%. And I had my readers in Phantom. That was nuts. A trough to peak gain from the last winter of more than 100,000%. Now, two very important caveats here. One, past performance is not a guide to the future, especially in cryptos. And clearly not all cryptos saw such gains in this time. Two, these are low to peak gains of the last cycle. We certainly didn't capture them all from bottom to top. No one does. Band, for instance, we only snatched 774% of that 10,000% gain. But these were all recommendations I had my subscribers in during that time. We were getting in when the vast majority were either staying away or selling. My point here is just this. What you're looking at here is a stark example of what buying when others are selling can mean if you do it smartly at these points in the cycle. If you buy the blood, as the old saying goes. So that's what we're going to set about doing again, starting today. But here's the thing. What's interesting is now that the market is much bigger and a lot further advanced than it was in 2018. There are more big name players invested and investing right now as the crypto tourists flee, which means it's actually a lot easier than previous crypto winters to see which projects the smart money is secretly locking up. Who is this smart money? We'll get to that soon. But as you'll see, in recent weeks, it's started to mobilize. And that's what I'm doing too.
Okay, but I need to break in here and play crypto skeptics advocate. Now, this recent crash has been massive. It just seems a lot more serious than the last few downturns. As you'd expect, we've been flooded with questions and worries from subscribers on this very issue. Many were along the lines of this one. I've been in crypto since 2017. Just want to know whether you feel the situation right now is more worrying than anything you've experienced in the past. Ryan?
Well, the short answer is no. For example, I remember my first big crypto downturn back in 2014. It lasted for 3 whole years, and let me tell you, it was a lot harder to have belief in crypto back then. Everyone, from colleagues in the finance industry to soccer teammates, would laugh at you when you tried to tell them about Bitcoin. And I'm talking when you could bag a whole Bitcoin for just $200. And all the same arguments against crypto you hear about today were around back then too. Scam, fraud, Ponzi, tulips, governments will kill it. All the usual favorites were there. Even Tether truthers, those who say the stablecoin Tether is a fraud, were screeching about it 8 years ago. Tether is still going strong today, by the way. But when you've seen Bitcoin rise from the ashes 3 or 4 times to always hit dizzying new heights, you gain an appreciation of just how unstoppable this asset class is. And when you look at what's happening beyond the price action, there's never been more activity, innovation, and adoption of crypto. Because the idea of a world of decentralization, a world enabled by the invention of Bitcoin in 2009, where your money and your data are owned by you alone, not faceless bureaucrats and tech behemoths, is actually a very big deal. Does it scare the powers that be? Of course it does. You can't expect powerful money managers and public officials to like having this kind of power stripped away. It's just like the Catholic Church failed to stop the evil printing presses of the 1400s. An idea whose time has come can't be stopped. I would say it's inevitable. So does this price downturn worry me more than the others? No, not at all. It's actually great, especially if you're still building your crypto stake up. In fact, this downturn is an immense opportunity I don't think you'll ever see again, if, that is, you believe in the crypto project long term, and, importantly, only if you lock in the right projects. Because you can bet your bottom dollar that's what players with much bigger wallets than you and I are doing right now, as I'm going to show you very shortly. Now, all that said, and going back to that common reader question, it'd be stupid not to admit the external environment has shifted. We've moved into a tightening cycle from central banks as they raise interest rates to try to deal with out-of-control inflation. And that's hit all assets, stocks, property, bonds. But crypto has really copped it. There's no shying away from that fact. But Woody, what I want to stress is all this makes the crypto industry stronger, not weaker. You see, these price falls expose the pretenders and the also-rans, and they reward the builders that can survive and build market share. What a refreshing change from the manipulated world of mainstream markets, where zombie companies are propped up for decades by easy money policies. The main point is, consolidation and capitulation cycles are actually what pushes crypto towards mainstream adoption, not away from it.
And okay, I get that. But if there's all this capitulation and selling right now, who's doing the buying?
Let me show you this chart. You'll notice something. Every bottom found in each cycle is significantly higher than the last one. So the overall trajectory, at least so far, has been up. Bitcoin and the crypto ecosystem didn't die. They got bigger each and every cycle. That's because these cycles all read from the same old script. It plays out like some worn-out pantomime, where everyone plays their part exactly the same. The critics criticize. The weak hands fold. It's called capitulation selling, and boy did we see that in June. But with that selling pressure gone, prices usually start to bottom out to what can be months of sideways movement. And then strong hands move in to lock up the best assets on the cheap. It's these guys doing the buying right now. As Zed Crypto puts it, certain crypto projects in recent weeks have started flaring with whale activity. In one instance, late June, this triggered a 900% surge in one massively oversold crypto. The whales are mobilizing. And, if I'm right, the great crypto lockup of 2022 is about to begin. Now, whales are basically the big-time crypto asset holders. They can be large hedge funds and investment groups such as Pantera Capital and Grayscale Investments, or big wallet individual investors that own millions or even billions of dollars worth of Bitcoin and Ethereum. These are the strong hands. And the cool thing is you can see exactly what cards they're playing if you know what you're looking for. It's all there, on a public lecture called The Blockchain. This is what I mean when I talk about on-chain data. It's right there for all to see. And in recent weeks, while general prices have stayed down, the smart money has been very clearly been accelerating their exchange movements. I think, this is my calculated guess from my experience of investing through several winters, that this is finally the start of something I call the great crypto lockup.
Okay, it's time for you to clearly explain what this lockup is, which brings us to another great reader question on how to attack this bear market in the coming weeks. I'm looking to invest at some point in the near future. Which of the thousands of coins actually have real programmed tech application behind the token that harbors potential real future value beyond mere quick cash speculation? Now, Ryan, your answer to this is to buy projects with the biggest likelihood of getting hoovered up into the great crypto lockup. So can you explain exactly what that is?
Sure. It's a situation where the dumb money is doing one thing, letting go of their crypto holdings, or just staying out in the market, and the smart money is doing something completely different, strategically accumulating. Get this. It was revealed in the first week of July that the world's richest Bitcoin wallet, a giga whale, is now officially on a massive shopping spree, splurging over $102 million so far. Now that's a lot of money to risk if you thought it had even a snowball's chance of going to zero, as the critics claim. But here's something that doesn't come across anywhere in the mainstream coverage. It's not just the whales and sharks of the crypto world going into lockup mode. Institutional investors, the suits, are actually totally unfazed by this bear market as well. A recent study shows that, despite the recent falls, 80% of institutional investors still think crypto will overtake traditional investment vehicles within a decade. And 88% believe it will have complete mainstream adoption by then. Which may explain why key figures on Wall Street and in traditional finance are talking down crypto in public, but locking up supply of key projects in private. The Daily Hodl just reported that institutional inflows into Solana, Binance Coin, and Litecoin just experienced a big surge. The Bank of America just held an event with 160 of its top clients. It told them in no uncertain terms that blockchain technology and the digital asset ecosystem are here to stay. And inflows into listed crypto funds have quietly reversed from negative to positive, according to Crypto Compare. These are the opening chess moves in the great crypto lockup. You can even see it playing out by simply looking at the volume of Bitcoin being traded on exchanges. You always tend to see this huge volume when prices are bottoming out, as the last of the sellers sell out and the fundamental buyers take their opportunity. You can also see the lockup brewing in supply. An interesting thing you can see here is that the supply of Bitcoin held by exchanges is falling sharply right now. It's not a perfect indicator, but to me it suggests that whoever is buying right now has no plans to trade them anytime soon. I'm seeing similar signs all over the place in a select few cryptos. Sometimes they're being locked up in staking contracts, sometimes in lending protocols, often in whale addresses. These are people and institutions who plan to hold for the medium term at least. And it's always a strong sign the weak hands are almost gone. Which is why I'm starting a brand new portfolio project to mimic this strategy. It's exactly what I'm doing with my own money right now. Just like the smart money though, you're not just buying any old thing that looks like it's cheap. You're locking up projects with real applications and real value, but at discounts you may never see again in your lifetime. This means sifting through the ashes of the crypto ecosystem, ignoring 99% of the worthless crypto projects out there, and instead honing in on those rare gems that you think will provide real value, with the highest potential to come out of this bear market first, fastest, and highest.
I'm guessing most of you would not be watching if you didn't believe that times of extreme fear are actually the time to buy, not sell. This was confirmed in a recent outreach to subscribers. Far and away, the biggest question a lot of you came back with was a version of this one. What is the best crypto right now, as per your research, knowledge, to invest in for 100x and 1000x rebound gain probability? Now, Ryan, you have an answer to this question. It's a token that you believe is going to be right at the epicenter of the great crypto lockup. Now, it's among your highest conviction altcoin plays for the next 12 months. And you've just made a significant personal investment in it yourself in preparation for a big potential takeoff point you think is coming in September. So Ryan, what is CryptoX?
The project is Chainlink. I've been looking all over the crypto space in recent months, dissecting whale and institutional activity, researching roadmaps, looking into fundamental drivers of value, and hitting up contacts in the crypto world. And Chainlink has emerged as a very strong lockup token. I think 10 times gains are possible over the next 12 months, even if the wider market trends sideways. You see, after a bit of digging, I worked out a big reveal is very likely on the 28th or 29th of September this year. Let me explain more of my process here. First up, despite the lockup signs I've detected, this former market darling is still trading at a ludicrously cheap price. It's back at 2-year lows, despite the fact Chainlink has become the dominant player in its area of the crypto ecosystem. But it's the next 2 years that have me really excited. You see, Chainlink is an oracle network. Now, an oracle is simply a source of truth, or more specifically, data you can trust to be true. So, the Chainlink system shuffles data when and where it's needed in a decentralized way. Now, here's the thing. Chainlink's technology has applications well beyond just the crypto ecosystem, much like how Amazon developed applications far beyond just selling books. Think of a future world where all manner of industries run on blockchain technology. There's the entire 22 trillion financial industry for starters. Believe me, despite what you hear, it's happening. And the suits are mobilizing. State Street Digital's vice president, a huge custodian of financial assets, just told the Australian Financial Review that he saw the market for tokenized real-world assets to reach 24 trillion by 2027. This is a leader in a huge traditional finance company acknowledging the inevitability of a tokenized future. Here's the kicker. A world of tokenized assets will need a decentralized oracle network to exist. And Chainlink is by far the favorite to win this race. As I said earlier, if I had to pick my future Amazon to emerge from the rubble, Chainlink is it. And it's not just me backing them to do this. In a big validation of the team and the tech, Chainlink managed to land former Google CEO Eric Schmidt in December last year as a strategic advisor. This was a huge coup. After all, Google is essentially an oracle for the Web 2.0 world. And Chainlink is attempting to be the same thing, but for a Web 3.0 movement running on blockchain tech. Now, I'm wagering an ex-Google CEO knows a thing or two about data. And here's the thing. In a world that's just had a big crypto fright, Chainlink isn't as scary a proposition to the powers that be as many other crypto projects might be. For example, the World Economic Forum, hardly a crypto fanboy, recognized Chainlink specifically last year as a technology pioneer. They're even tweeting about them. And yes, I know, this establishment type of endorsement isn't normally something I look for in a crypto. But the truth is, these are the kinds of projects that are going to be locked up in the months ahead, not the crazy out there ones. One last piece of the jigsaw behind this recommendation. As I said before, 28th and 29th of September this year could be key dates. You see, Chainlink is due to announce a new staking mechanism at some point this year. And my best guess is towards the end of September at the Smart Contracts Summit in New York. As you can see, Chainlink have 5 speakers lined up to speak, including co-founder Sergey Nazarov and former Google CEO Eric Schmidt himself. Now that's a suspiciously high presence for a 2-day conference. My bet is they're going to announce that they're going to go live with their new staking system. Now, I won't get into the complexities of why this staking system is so good for adoption of Chainlink's Oracle system, but it is really clever. But I will explain briefly why it's so important for the price. You see, staking involves locking up some Chainlink tokens in return for a share of the income generated by the overall system. In other words, the supply of Link is gradually locked up, which creates price pressure upwards. Now, if adoption of Chainlink's product takes off, as I think it will, this creates a perfect storm for price explosion for Chainlink over the next 12 months, which is why I'm always carefully watching adoption metrics on this project. But this imminent staking news perfectly explains some strange things going on behind the scenes with Chainlink in recent weeks. I've started looking at how this new staking system will work, and the more I learn, the more I'm convinced this could be the most positive crypto bombshell of 2022. I think 10 times gains over the next 12 months are very possible if I'm right on this. This would be resetting Chainlink back to its previous high set in May 2021. But honestly, that could just be stage 1 of Chainlink's long-term potential. I think it could actually go much higher than that. Of course, I could be wrong. The September announcement might not happen, and it may stay trapped in sideways trading for the rest of the year. But the idea right now is there are several projects like Chainlink out there. By following this kind of process, by analyzing the fundamentals, by understanding the token economics, and by watching the buying behavior, I think we can build a portfolio of outstanding opportunities right now.
Now, there's a lot more to the Chainlink story. And like he said, it's just a small part of a complete portfolio strategy that Ryan has designed around the great crypto lockup. Which brings me to a big announcement. You may or may not know that over the past 5 years, Ryan has helmed 2 crypto services, Crypto Flip Trader and New Money Investor. Well, I can announce tonight that he is retiring both of them to focus solely on a new project. Despite what the naysayers are telling you, cryptocurrency's 1.5-decade journey to mainstream acceptance is nearly complete. The big reset over the last 6 months has changed the game and handed you a once-in-a-lifetime chance to build up a portfolio of potential future Amazons like Chainlink. To help you achieve that, we've gone back to the drawing board. You see, Ryan thinks now is the time to get serious about crypto. We're well past the stage where this is just a fad or a get-rich-quick scheme. Instead, what you're seeing is the emergence of an entirely new asset class. To be clear, we're living through a momentous moment, something not seen since the Dutch East India Company formed the first joint stock company in 1602. That moment started the stock market as we know it today. This revolution allows digital assets to represent shared ownership of decentralized infrastructure. It completely reinvents this old model in many new and amazing ways. Like Ryan said before, pushback is inevitable, but so is change. Understanding that underpins the investing thesis behind Ryan's reimagined advisory. It's called Crypto Capital. And if you agree with what we've been talking about so far, that this point of the cycle is exactly the time to start making calculated guesses on certain projects, then Crypto Capital is a new project we'd like to invite you to join today. Now, you can't fight the new war with old weapons. As Michael Saylor, the world's largest public holder of Bitcoin, recently stated, the parade of horribles in the cryptosphere are about to get killed off. But, just like with the dot-com crash, a new class of crypto asset will rise. Now is the time to follow the smart money and lock these assets up. Human nature wants to do the opposite of what's usually the best course of action. Everyone wants to get involved in the frenzy. No one wants to buy in the gloom. Crypto Capital which Ryan has decided to focus 100% of his efforts on from here, is a portfolio building strategy based on how the smart money is starting to exploit this bear market. Now, in terms of risk versus reward, we've not seen a better setup in the entire history of the crypto markets. If Ryan's right, this gives you a lockup zone of the next 3 to 6 months to build a portfolio. This is going on similar periods in the previous 2 bear markets, where prices traded sideways, but whales accumulated at a massive pace. You just need the confidence to act and the right attack strategy. Crypto Capital is going to provide that for you. Here's how it's going to work, starting with the Crypto Capital core portfolio.
Bitcoin bottom getting closer as speculators completely expulsed. That was Glassnode on the 5th of July. Look, honestly, we don't know that for a fact. You could easily see more down moves. The macroeconomic situation, which has impacted cryptos so much in 2022, well, no one can predict or control that. What we do know is this. Market tourists, gone. They have exited the building. Prices, staggeringly discounted from last November. Smart money, buying, not selling. Those are objective facts. So with that in mind, if you were starting from complete scratch right now to build a core portfolio of future crypto Amazons at carpet bomb prices, what might those assets be? What you're looking at is my answer. This is a portfolio of core projects I'm personally targeting today. All are currently down up to 70% or more from their highs. Now that in itself certainly doesn't make these 5 core holdings buys. Almost everything's down between 50 and 70% and more. But only a minute fraction of these projects will come out of this stronger. Most will flame out, like Napster, Webvan, and eToys did in the dot-com crash. I believe each one of these 5 holdings I dissect for you here has the credentials not to just survive, but to morph into a core player in the next evolution of crypto, and even the 3rd iteration of the internet, Web 3.0. They're core holdings I'm personally locking up every time the price dips, just like the whales are doing right now. Now, I expect this number to grow from 5 over the next 6 months, but maybe not by much. And it may even drop back periodically as we lose a core project or 2 in a very fluid situation. I am certainly not infallible, and this is not an exact science. One thing I'm going to be very firm on with my new Crypto Capital project is we're not going to adhere to the old rules of crypto, the ones that prevailed from 2009 to 2021. HODL, hold on for dear life, is one of them. The idea that you never ever sell has been a meme in the crypto world for years. Holding onto a project for the sake of just holding is belligerent and a bit arrogant. We're not going to do that. The guiding rule of the Crypto Capital core portfolio is to build positions in bedrock assets at very distressed prices, ones that could form the backbone of a new decentralized future. But we won't be signing our name in blood on any of these core holdings as soon as they enter our wallets. If signs appear we're wrong, we'll bail. But as it stands today, I don't think I am wrong with any of them because of my selection strategy. So, what is that? On the one hand, my fundamental research hasn't changed. I'll be looking at the same things I've always targeted in my blockchain-based plays since 2014. Adoption metrics, valuations, team and community, project growth and competitive advantage, token economics. These core holding boxes have all been ticked. But as you've seen, the game has changed very quickly. This creates more dangers, but it's also a situation where the old cliche, once in a lifetime, is 100% true. Certain core assets that will drive crypto into the mainstream integration are about to get locked up. To pinpoint what those projects are, I'm focusing on two things. One, abnormal shark and whale activity. As I've shown, the whales are mobilizing, as evidenced by well-known whale Scarlet Witch, who recently locked up 10 million Avalanche tokens in a single swoop. That's $246 million worth. These smart money moves are not all dead set indicators a core holding will be a future Amazon. Some are just opportunistic short-term trades. But interpreted alongside other data, they're definite signposts. 2. Behind-the-scenes moves from the suits. The New York Times put it bluntly on 5th of July. They said, "In the great cryptocurrency bloodbath of 2022, Wall Street is winning." Remember, for all the problems these guys cause in the conventional financial system, they know stuff we don't. They have bigger pockets, contacts, research teams, and resources than the rest of us. And they are very adept at talking down crypto from one side of their mouths and issuing buy instructions from the other. An example, in one recent week, institutional investors feasted on a record $51.4 million worth of investment products offering exposure to shorting the price of Bitcoin. So they took millions from largely clueless clients betting against cryptos, right? While at the same time, as Forecast puts it brilliantly, while critics say the bubble has burst on crypto, Wall Street is moving in to take advantage of what could be some fire sale asset prices. I'm from this industry. I know this is how they think, and I know this is exactly what they're doing. Goldman Sachs, arguably the world's largest TradFi institution, just bought $2 billion worth of distressed crypto assets. One Wall Street high-up has admitted one of our 5 core holdings will almost certainly climb, and I would be shocked if you didn't make money buying it right now. Shorting at or near the bottom of the market is rank stupidity. You should do as the institutions are doing, not what they're saying. Locking up core crypto projects. If you join this project today, first and foremost, I'll send you a complete rundown on how the Crypto Capital core portfolio will operate. Why the 5 foundation holdings were selected. Why I think each has the potential to be a future Web 3.0 Amazon. How they feature in the great crypto lockup. And why there's a very reasonable chance you'll look back at their price levels now in 5 years' time and thank heavens you had the guts and foresight to get in when you did. Remember, we're not going for temporary price bounce backs with this core portfolio. We're looking for the same projects the smart money's moving into right now. Once they get in at this stage, they will most likely never get out. The Crypto Capital core portfolio is designed to make up the serious part of your total crypto allocation. Think of them a bit like the crypto blue chips, a bit like investing in the top 200 stocks on the ASX. I think it would be reasonable if you're a moderate investor who believes in crypto long term to allocate around about 5% of your total portfolio to these core holdings. I'm personally allocating a whole lot more than that. My own portfolio has an allocation of around about 37% to crypto-based assets. But keep in mind my age. I'm young-ish at 42. I have a pretty decent understanding of this industry. It's been my full-time occupation for the past 5 years, and I've been in the industry for 9 years. I have a decent income, and I have a very high tolerance for volatility. So of course, you could pare down your own allocation to just 1% of your total capital if you like. But these core holdings are my bedrock positions to put that money into. All that said, if previous winters are a guide, some immense shorter-term gains are also going to present themselves in certain altcoins. This is more extreme speculation, and it should be approached with caution and only with funds you're prepared to lose. But I think you're going to see some smaller altcoin projects go parabolic as the great crypto lockup gains momentum. Which brings me to crypto capital's speculative portfolio. Naked greed was behind much of this current crypto mess, but that doesn't cancel out the fact that some altcoins are likely to snap back very hard at some point. Certainly, that's what whales and commercial buyers are positioning themselves for right now. As I've shown you, these price snapbacks may have already started, but on a limited scale. Recent ones include Steppen, Convex Finance, the Metaverse project The Sandbox. Each saw double-digit rebounds inside a 24-hour period. Even big bad news alt Celsius has seen its price snap back from 53 to 83 US cents. Now, those are just really short-term moves, and a lot will fizzle out. In fact, some of these price pumps are traps for the unsuspecting. So be careful if you're having a dabble at this end of the market. But in saying that, I think if you get your timing right on certain key alts, ones that have a genuine technology behind them, then over the next few months, you could see potential gains that dwarf even those made at the end of the last bull run. And those were pretty crazy. Last year, I got my readers into alts like Lend for nearly 400% in 3 months, and Litecoin 143% in 3 months. One subscriber, L Noble from Bagheera Waters in Queensland, emailed me at the time to say, "Ryan's knowledge of the market has made me 50 times my money." Now that's great, but of course, past performance is not a guide to the future. And there's no guarantee I'll perfectly nail every token about to get locked up in this next phase. As we've shown, this is an extremely volatile point in the cycle. On-chain metrics suggest the smart money is starting to make its plays, as it did in previous cycles. But you still need to be prepared to lose money on the plays that I get wrong. We're always dealing in probabilities, not absolutes. But I have a high conviction that we could see huge gains from the right altcoins if you get the timing right and if they get the kind of smart money buy-in we've been talking about. Again, you certainly don't chase any old altcoin here. First and foremost, you look for practical, real-world projects that are bringing blockchain mainstream, completely independent of market histrionics. Second, you seek out altcoin assets that the whales are quietly starting to take charge of. A recent example is Algorand. It's been stuck in a downward price trend for several months, but in that time, the whales have started to take massive bites. From a total of 75.6 million in recent algo transactions, a whopping 63.9 million were conducted solely by whales. This is the great crypto lockup in action. As AMP Crypto put it, given that Algorand is only declining on the charts, this is the most appropriate time for the whales to accumulate as much as they can, since retail investors aren't. This would place them in a position that would reap profits to them right off the bat once the altcoin goes up. These are the kind of plays we'll be making in the crypto capital speculative portfolio. I'm currently circling 8. It's worth pointing out that while Chainlink is an altcoin, it's not part of the speculative portfolio. There's a reason why on 7th of July, Analytics Insight just dubbed Chainlink the savior of the bear market. I'm so excited about this project's imminent potential, I've promoted it to core status. Now that doesn't mean Chainlink doesn't carry considerable risk. But the 8 tokens we will examine in this report are ultra speculations. More things could go wrong with them than could with Chainlink. But if things go right, they could each go supernova. Just like with small cap stocks in the stock market, these alts each have the potential to graduate to large cap status. That's what the smart money is betting by taking big positions at distressed prices. If that happens, we might see some of our speculative picks graduate to the core portfolio in the next year or so. Just know that each of these plays has a real risk of going to zero too. They're moonshots. You need to approach this portfolio with your eyes wide open. That's a big driver in my decision to separate out the portfolios between core and speculative. With both crypto capital portfolios, you don't have to choose one portfolio or the other. And how much capital you decide to allocate is entirely your call. Whether that's 1%, 5%, 10%, or something else is entirely up to you. My judgment is that portfolios which include the right cryptocurrencies, bought inside that lockup window of the next 3 to 6 months, will do substantially better off over the next few years than ones that don't, just as they have over any meaningful time frame over the past decade.
Well, today we're opening up charter membership to Ryan's reimagined crypto advisory, Crypto Capital. If you join, these are the first 2 resources you'll receive. Ryan will walk you through setting up both a core portfolio and a speculative one, each calibrated for this exact point in the market. Now, we're not sugarcoating anything with this launch. In the last 6 months, most crypto investors have had, not to put too fine a point on it, an absolute nightmare. As such, Crypto Capital is perhaps one of the most contrarian advisories that we've ever launched. It's for you if you believe that times like this are the exact points to make your plays and lock in your stakes. Now, if you don't believe that, do not join. But if you do, and you recognize this crash for what it is, and see it as a great time to buy, not sell, then becoming a charter member of this new service right now could be one of the smartest investments in your financial future that you ever make. You've witnessed some real fireworks in the crypto sphere this year. But you know what you haven't seen? A breakdown of crypto and blockchain technology itself. That has not happened. The infrastructure has held against its mightiest onslaught yet. What you have seen is a risk-on asset responding exactly as it should in such circumstances. Risk-on meaning a highly liquid, unregulated, speculative asset in a world where all speckies have been punished. Crypto Capital, put simply, is a service for you if you see this as an immense opportunity, not an indictment. Ryan has been neck deep in the crypto world since 2013. While 9 years may not seem like much in traditional finance, it's more than 70% of the entire lifespan of cryptos. It's immense. Now, we've had many crypto winters in that time. Ryan's going to weaponize this experience for you and use every tool in his box to help you build a portfolio of future crypto Amazons at prices you may never see again. You've also never seen a service like Crypto Capital. It's a crypto service with its feet firmly on the ground and run by a fully accredited financial advisor with years of experience in the traditional financial world. You'll see what I mean if you become a charter member. Because it's a newly evolved service, a precarious market, and you'll be taking a leap of faith, I've arranged for an extended refund period for Crypto Capital. It covers you for 60 days. That means you'll have 2 full months to dig into the 2 portfolios and whether each position is getting the lockup attention Ryan predicts. If at any time in your first 60 days, the whole approach seems too scary, too risky, or maybe even just too early for your taste, then we insist on refunding your subscription in full. For this service in particular, we don't want to have any members who aren't 100% comfortable and committed. The core portfolio and speculative portfolio, and their monitoring and evolution as we go from winter to spring, will be cornerstones. But as you'll see, there's a lot more to Crypto Capital than just tips. The new climate requires a back to the drawing board approach. Wouldn't you say that's correct, Ryan?
That's certainly been my plan from the outset. I want to put a stake in the ground as a credible, almost conservative crypto advisory. ASIC does not regulate crypto asset advisories in Australia. Consequently, many experts out there are feeding you crypto information without qualifications, relevant experience, or consequences. We're an ASIC licensed investment business. We have rules to follow, an internal compliance regime, and a reputation to protect. Now that's about as conservative as you can get in the crypto world. With all that in mind, crypto capital will not be into aggressive in and out trading. This is not the market for that. You do that in a bull market. And we will leave that to the cowboys on YouTube and Reddit. We'll be building a medium to long-term portfolio of digital assets, very much in the same vein as you would a stock portfolio right after the dot-com crash. I mean, you don't buy Netflix in 2002 and then sell it in 2003. Of course, we'll be flexible. We'll take new opportunities as they come. We'll exit ones that start to buckle. We'll probably witness some of our projects evolve as the market shifts and they pivot from their original idea to find a superior product market fit. I've seen that happen many times, especially in bear markets. The point is, you won't be flying in and out of stuff on a weekly or even monthly basis. This is not that kind of service. Related to that, we will not be touching leverage. Leverage is the culprit behind much of the carnage this year. The fact is, it can amplify gains, potentially, but can also wipe you out and kill your mental state, even in a bull market. We will be taking pure, unleveraged, high conviction, long only positions. The crypto capital ethos will also center on paying more attention than most to the human component. Blockchains, algos, smart contracts, protocols, front-running bots. People tend to overlook the important human element of the cryptosphere. In my experience, the best projects only come from the best people. You need to gravitate to these people. Reach out. Find them at conferences. Get to know them if you can. This is going to become even more important than ever going forward. Jason Choi is a pretty onto crypto investor who's built his portfolio around relationship building. He says that during a bear market, there's a lot of self-selection in who chooses to double down their efforts in the industry. So it's often the best time to make lasting, meaningful relationships. When I started mapping out crypto capital, I wrote down some mission statements. Meaningful relationship building is right at the top of the list. We will be mindful, skeptical, and highly suspicious of shiny and new. Aping is another crypto maxim I think has had its day. It's a strategy where you just jump on project tokens almost without any due diligence, based solely on the fact they're new to the market and have hype and PR behind them. While this has never been my personal approach, I think going forward it's even more essential that you concentrate on proven projects with track records and smart people behind them. That's what we'll be doing with crypto capital. If something is being hawked by a YouTube influencer, that's going to be a big red flag for me. Now, there may be some future crypto Amazons that don't exist yet or are in their infancy, but I'm pretty sure those will be the exception, not the rule. For the most part, we'll be targeting established tokens with real-world applications and lockup movements taking place around them.
Now, if that sounds like a project you'd like to be involved in, what will it cost? Well, the big differentiator here is approach. Ryan's putting his old financial advisor hat on. He was a personal advisor for 7 years back in 2007. Crypto Capital will provide the strategies to invest in this moment in a sensible and considered way. It's unlikely you'll find anything like this anywhere, especially now. He'll provide advice on strategies to make crypto part of a properly diversified portfolio at this lockup stage of the market. How to create a core portfolio of leading projects, the crypto Amazons. Imagine if you'd locked up Amazon shares at around $10. They were $3,545 last November. Ryan will be aiming for nothing less than the crypto versions of that far-sighted play. Small cap cryptos for those who want to take some higher risk, higher reward speculations. Opportunities for generating income in the digital asset world. What's more, you'll be able to make your lockup portfolio moves on a custom designed app on your phone. This phone app, which we've worked on with some smart cookies to develop, removes all the stress and hassle. Back in the day, if you wanted to trade different crypto assets, you had to sign up to multiple exchanges, store lots of different private keys, pay expensive trading or gas costs, and keep detailed records of every transaction for tax purposes. It took nearly 20 minutes to make one trade. Well, the trading app Crypto Capital uses is simple and one touch. It's also non-custodial, a huge plus, and a non-negotiable for Ryan in an environment where crypto exchanges have come under pressure. That means only you can access your cryptocurrency holdings, not exchanges, not us, not the software company who developed the app. This removes a huge risk for you as a cryptocurrency investor. It means you no longer need to trust anyone to keep your funds secure. And it's exclusive to Crypto Capital members. Now, you'll get a special link when you join. Put simply, Crypto Capital is for you if you see there's an opportunity for the taking right now, but want a sensible, easy, measured plan for attacking it. Now, there's no shortage of YouTubers, TikTokers, and other cowboys in the crypto industry quick to try and make a buck in a bull market. But in a bear market like now, they all go into hibernation because they never really understood the real story behind crypto. Ryan does the exact opposite. He's winding up both of his current digital asset services to focus solely on Crypto Capital and redoubling his efforts to introduce the benefits of a decentralized world to you. Now, it's hard to quantify what Ryan's new approach and level of analysis is worth. Remember what this is. It's a service for the serious investor who wants to allocate a certain percentage of their long-term capital to this new asset class. Ticker Nerd is a monthly crypto number crunching service that had a go at it and recently assessed that this level of on-chain analysis, blockchain tech expertise, sentiment and whale tracking, in-the-field investigation and tokenomic valuation would put you back up to $38,000 per month based on $75 per hour. Now look, I don't know about that calculation, but I do know this. What Ryan is doing is definitely worth a lot. As you see on your screen, Ryan has a following of subscribers that swear by his no-nonsense approach to the crypto space. In my experience, we'd be justified in a $5,000 a year price tag if it was a bull market. But it's not a bull market, and I appreciate you'll be taking a leap of faith here, just like Ryan. So, after much thought, we're setting the publisher's price of Crypto Capital at $3,499 per year. However, this is a very special launch at a unique time in the market, at the ideal time in the market. But as I said at the start, we realize it's not easy to do when many in the mainstream press are screaming Bitcoin is dead. Ryan urges you to ignore those pundits. And we've come up with an awesome charter membership offer to encourage you to do so. If we hear from you right now, today, you can lock in your place for a 57% discount on that price, meaning you can cut that subscription fee by more than half, $1,499 instead of $3,499. So an effective $2,000 saving, which you can use towards Ryan's core portfolios. Still, not chicken feed, but we can't operate this service at a lower price point than that. Now, if it's too much for you, that's totally fair enough. But I'd say if you can't afford a $1,500 investment in this level of analysis, you shouldn't be in cryptos at all right now anyway. Just keep in mind that if just one of these crypto plays returns 10 times your money in the next 12 months, that's a $5,000 investment into $50,000. And those are the kinds of rewards we're going for with Crypto Capital's core and speculative portfolios. So, with that in mind, $1,499 is a pretty sound outlay if you're aligned with what we've covered so far. Not only that, when you become a chartered member, we will further reward your boldness by locking in that $1,499 for the lifetime of the service. That means you will never have to renew at $3,499. You will be automatically renewed with that $2,000 saving each year you wish to remain a subscriber. Now, we think that's an entirely reasonable reward to give you for having the guts to make the leap of faith on a service like this at this juncture in the crypto market. To repeat, $1,499 instead of $3,499 for as long as you wish to remain a member. And remember, you'll have the backstop of that 60-day refund guarantee, meaning you can request a full refund of every cent of that subscription fee at any time in the next 2 months. If anything about this service does not meet your expectations, just request a full refund. We'll be happy to give it to you. So $3,499 is the standard price. $1,499 is the charter member price with a 60-day refund guarantee. To recap, you'll receive both the core portfolio and speculative portfolio setup resources. These will be closely monitored and adjusted over time. But there's a third component here that we've not touched on, and that's income.
Yeah, income is going to be part of crypto capital. In a way, this is the end game, a perpetual income stream from owning the digital infrastructure of the future. Sometimes I imagine a future where the kids of early adopters now are living in a world funded by crypto dividends, the same way the families of oil tycoons were in the 20th century. But again, we're going to attack it in a new market contextualized, conservative way. Income will feature in both the core and speculative portfolios, but only in a calculated, measured way. It will never be the sole means for investing. As you know, income streams from crypto have become increasingly popular in recent years. You can do this through various methods: lending, cloud mining, and yield farming, to name a few. But staking is the main one. Staking a crypto means locking it up in a smart contract. And without getting into the complexities, it basically helps secure the network and ensures only valid transactions are being processed. In return for helping do this task, stakers are rewarded with newly minted crypto. To give you an old world analogy, it's a bit like locking up your cash in a term deposit in return for a fixed rate of interest. Now, that analogy is a bit tenuous from a technical point of view, but I think it demonstrates the point. The staking dynamic has not changed in this bear market. As the great lockup plays out, the ultimate goal across both of our portfolios will be to land you on several of the best of these income-producing plays. The aim of the report is to explain how staking works, both from a technical and practical level, and to get you on the front foot of where income from cryptos is heading next. It's not something you have to do straight away, but if you want to develop your knowledge and get familiar with the process, now is the time to start.
Very quickly, there's 2 important resources you'll get with charter membership. The first, how to build a lockup portfolio like a pro. This is crucial because it shows you the best way to allocate your capital into each portfolio. We talked about why now is a great time to buy certain lockup tokens and what ones you'll be targeting. This resource covers the how. If you want to take a punt on Ryan's core, speculative, and income-related lockup plays, how do you do it? How much should you allocate? In what proportions? In what order? And over what time frame? This is a practical look at how to tackle allocation at this pivotal point in crypto history when prices are totally bombed out, but risk and fear still ripple through the market. Then, finally, there's the crypto capital blueprint. Now, we know how daunting it can be to enter this space. Now, at this point, maximum pessimism, maximum opportunity, even more so. The crypto capital blueprint is a full compendium of all the practical knowledge you'll need to hit the ground running. You'll learn how crypto and blockchain work, how to set up your crypto trading accounts, how to buy your first Bitcoin and altcoins, how to set up and store your crypto in a digital wallet, how to trade altcoins on an exchange, why self-custody is crucial, especially now, and crypto specifics for Australian investors, and heaps more. Now, I know there's going to be a learning curve for every new member, That's why Ryan and his team have put this blueprint together for you. So that's nearly us done. I hope you got some valuable insights and a bit of useful perspective. But now you have a big decision to make. I hope you appreciate our directness and honesty. In truth, not Ryan or anyone knows exactly how many more problems still lurk beneath the surface of centralized crypto lenders. We don't know exactly how much more liquidation there is, how much more rubbish needs to be cleaned off the books. Anyone flagging a definitive bottom in the next few weeks doesn't know what they're talking about. But hear me when I tell you this. History suggests the entire crypto market will rally to greater highs again. The smart money knows this, and it's taking its own actions accordingly, while blood still washes through the market. The key right now is to be alert and bold, to make your plays and then be patient. And that's what we'll be doing with Crypto Capital. $1,499 for 1 year, down from $3,499, a 57% discount, locked in for as long as you remain a subscriber, covered by a full 60-day refund period to go over the portfolios and see how the whole service resonates with you. If at any point you have second thoughts, that's fine. That's what the 2-month refund guarantee is for. Simply call our member services team, cancel your subscription, and ask for your membership fee back. They will put the money back on your card, no questions. To become a charter member of Crypto Capital now, simply click the link below.